Diversification is great if you're already wealthy, but if you're trying to build wealth, it might be slowing you down. Trying to level up without the hype, you're in the right place. What's good? I'm Juan. Welcome to the Everyday Come Up. This is where we focus on real strategy, real positioning, and making smart moves to actually change your life. In recent videos, I talked about positioning, about infrastructure, about long-term thinking. Today, I want to challenge something almost everyone repeats. Spread your money. Diversify. Nah, I don't fully agree with that. Wealth isn't usually built through dabbing. It's built through concentration. One skill, one thesis, one asymmetric opportunity, and the discipline to stay with it. See, Warren Buffett didn't start by owning hundreds of random positions. His early wealth came from concentrated bets in businesses he deeply understood. He once said, diversification is protection against ignorance. When you understand something at depth, concentration becomes strategic. Jeff Bezos didn't launch 10 businesses at once. He focused on one category, books. Then he built logistics, then infrastructure, then he scaled. That depth created expansion. Elon Musk didn't scatter investments across trends. He concentrated nearly everything into Tesla and SpaceX and nearly lost it all. That wasn't diversification. That was conviction. They didn't build wealth diversified. They diversified after they won. Now bring this into real life. If someone has anywhere from $5 to say $100,000 and they want to invest it into something so where they can make more money, their instinct is to split it across 5 different ideas. Some stocks, some digital assets, maybe a little real estate, maybe even a business. It feels responsible, but it often creates diluted conviction. If you put 20% into 5 ideas, you rarely master any of them. But when you go deep, you're going to gain pattern recognition, emotional stability, strategic timing, compounding knowledge. Surface investors react. Deep investors execute. This isn't about recklessness. It's about informed concentration. You don't go all in because you're emotional. You do it because you study something long enough to develop conviction. And conviction changes behavior. Every investment matures differently, okay? 2 years, 5 years, maybe even 10 years. But if you constantly pivot between ideas, you constantly keep resetting the compounding clock. And compounding is what rewards patience. But see, most people don't stay long enough to experience it. Diversification feels safe, but for many people, it's simply fear disguised as strategy. Fear of being wrong, fear of volatility, fear of committing, and fear rarely builds wealth. I got one for you. Hopefully this sticks. Hopefully it sticks. Concentration builds wealth. Diversification, it protects your wealth. And most people are trying to protect money they haven't even built yet. So people probably wonder, what would you do? If I had $100,000, I find one thing I understand, one thing I believe in, one thing I can hold through volatility, and I go so deep. Because death is what creates asymmetry, and asymmetry changes lives, people. In the next episode, I'm going to show you how cash flow and focused income create the ability to acquire real assets, and why every disciplined move builds on the one before it. Because wealth isn't random, it's layered. Wealth isn't built by touching everything. It's built by understanding something deeply enough to stay with it. Make smart moves, and I see y'all on the come up.